Okay, guys, good evening. Guys and girls, I should say. I just have a habit of saying guys, even though I mean a mixed audience. Kind of an old school thing. Okay, what happened on CONY and MSTY? So let's start with CONY for 4-8 on Monday. So we had a 6.68 rise. That was well received, up to 256.99 in the underlying in coin and 2614 on Coney. All right, the bad news was we closed very close to our weekly. Remember, audience, we have two sides, right? We want to rise and we want our synthetics to get in the money. So we didn't have any trades today. Let's look at our 250. So we went from having literally a loss in this to having a gain, right? Because our capture in selling the call will yield more money than buying back the put. Now, so there's only $9.90 left because we're ahead of the price on the 250. So these are long term. Normally they move slow, but as we get down to 9 trading days left, we want to be above the synthetic strike price, right, of 250. And so the puts will expire worthless. And the calls, if we're not, the higher they are above 250, the more they're worth, right? But on the short term, okay, and the short term being, let's go to April. Okay, we didn't put any trades on again today, but we had in our active category the only calls, right? And that's why I didn't rate this very high. So my negatives for the week, or all our weeklies, are in one strike price, right? So that strike price is 257.50. Well, we're 20% away from being in the money, right? Because we're at 256.99, right? So we've got 51 cents before we're at that price. So we could go there, but we only sold those, I think, for $5. So the current value, if I jump all the way over here to our holdings, is right now to buy those back would cost us $8.6. And when we sold them, we received $5.08. So we've got $8 million that, because of the bulk of them, all of them were at one strike price and very close to the money. Right? So now they're super close with 4 trading days. Now, is that good or bad? Obviously that's bad, or that's worrisome. However, there's always two sides to that coin here. One plays off the other. So we get further and further. If this thing runs up to 300, then the price of this alone is $50 because we're $50 above it at 300, right? Plus time premium. But what that does is that costs us, millions to buy that back. So the perfect scenario is we get up and we get real close to this, right? Or maybe $1 over at expiration at the end of the week, and we buy that back. That's only 20% because we sold it for $5. We'll be at 258.50 and we'll buy it back for $1 because these get further and further, right? This will be down to $4 or $5 by Friday with a week to go. Remember, these have till 4/19. But the weeklies obviously expire every week. So let's go back to April. Let's see what cash was doing. Let's see about shares. So on the cash position, we increased our cash because I think there was a share increase. Let me look at where I have that. On our holdings, there were 325,000. Previously, we were at 15,175,000, right? So 2% is a pretty good. I haven't seen this kind of volume flow in it in the last week or two. It's been except on the day when the declaration day and people wanted to jump in and get paid, right? Even though it goes down that same amount for the opening price the next day, then it can trade on its own merits, and typically it goes up. So that strategy of, trying to get out and get back in at a cheap price and make more than what you would have been paid on the dividend and not have to pay taxes on it, that doesn't work so well. Sometimes it does. But remember, if you're day trading or short-term trading, you're going to pay, normal income on that because it's not long-term capital gains, right? So there's no really way to beat the system. But there are some smart ways to play these things. Okay, let's get back to April and talk about our cash. So the net cash, even though it moved its position, because the money comes in from people buying in, so they haven't had a chance to distribute it to their money sources, which are the two treasuries and the First American government, right? So it was a net 775 loss. So let's talk about our active again. So I added these comments here, and I also changed the chart for you guys. Okay, so we moved up some and the above the synthetic prices, right? I showed you that. So we went from, barely being in a loss here to where we're in a position, if we closed it out today, we'd have a $12 million gain, right? Now, I will say what I expect to happen this week. I can't predict where we'll end the week on the coin price. I can give you the technicals. But I can tell you that one offsets the other, right? If we rise too high and hurt the weeklies, we'll make up for it in the synthetic. And especially since the synthetic only has 9 trading days, it's pretty close in the price movement to what the 5-day or 4-day now expiration on the weekly calls. All right, so we moved up some in the synthetic strike price. 257 is greater than 50 to help our synthetics. So what is going to happen this week, I can tell you pretty much for sure, is we're going to roll out of the synthetics by the end of this week. The only reason we wouldn't do that is, we still would do that even if coin underlying price went way down. But we want to give the cash back to buy the weeklies if we rise up, right? If we run up to 1800, they're going to have to pay 100 plus to buy back these calls down here at 257. So if we were, sorry, 1800, I was thinking of MSTY. But if we run up to 270 or something, it's going to be an expensive, or 280, it's going to be an expensive buyback on this amount of contract. So we'll probably roll out, and we would capture a lot of gain if we roll out of our synthetic and put a new synthetic on maybe a month out. So again, let me read the new comments. This green is my new comments, right? Last trade today at close was 7.5, but when I actually looked at what they updated the holdings, they're showing 8.6. So I'm not sure what they used to calculate it. The last trade I saw at the end of the day was 7.5. But let's assume they're correct in this, right? So we paid $8 for this position, and right now it costs us $13 million to get out of it on the weeklies. So you understand that a little bit better. There's where we collected the 8 million right there, right? So we collected 8 million. We were only 6.89% out of the money at the time. So anything above 257.50, and we got $5, so we can run to 262 and essentially break even, not make the 8 million. And every penny over that, we start losing. So that's why we don't want that to run too far. There's our active. I'll go over the chart in a minute with you. But again, these tend to offset one another. But the perfect world is we're capturing these weeklies For instance, if we capture 1%, right, in money against the fund in 1 week, just assume 50 weeks, even though there's roughly 52, but with holidays, we got 50 weeks worth of trading. So if we do 1% a week, that matches the 50% yield. Well, that's not good enough in a CONY with a 91% implied. I didn't update this today, by the way. I don't think it changed a lot, but I will. In order to do that, we need to be at 1.8%. So that 8 million will certainly do the trick, but we need to be at 257.50 or under. All right, let's take a look at the chart. So I got a new chart source, and all it does is it has a simple 50-day moving average on it, still has the volume, and this is a MACD for those of you that follow stochastics and moving average convergence, divergence. And you can look for things. When you cross over or under, like this 50-day, simple 50-day moving average, we're still above that, right? And you can see that we don't really correlate. In CONY's case, it's been trading for about a year, although I thought I had a year chart. I don't know. Yeah, that goes back here, so maybe this is a little longer. Maybe it's a 2-year chart. But you can see that the real activity in coin has been over this last period of time. So anyway, nothing there. As I said, I expect the volume to come in as we start to rise up. If you don't see volume, it just means we blipped up and we can come right back down. So we want to see volume here. But again, I wouldn't mind if it didn't happen this week. I'd love to capture some of those. I don't want us to go below 250, but I'd love to capture the weekly. All right, so on holdings, let's go over that again. So again, I'm grouping all this cash into one area. Nothing major there. 325,000 new shares. When you run the calculation, what is the price based on the number of shares divided by the assets? It's saying 26.20. So we're actually 6 cents of a discount, right? We closed at 26.14. I think MSTY is just the opposite. It's either even or slightly ahead, but we'll see that in a minute. But again, all of our calls are bunched here. So in the synthetics, it's very easy. I put them in orange since they're already grouped together. We want to see the top number bigger than the bottom, right? So that's why when we look at this, we've got a $12 million profit, okay? We're ahead of the game if we closed it out. That's why for sure they'll close it out by Friday, because there's going to be very little left in the put. And they want to roll this ahead, especially if they have to pay a lot of cash to buy back the weeklies. They would have the cash at that point, because we would see a huge rise in this number when we start moving up. Okay, the only other thing to cover is payments. Nothing really changed here. We're still looking at like 52 cents, and that's coming out of short call income. So kudos to them so far. But again, we don't want to take an $8 million hit, right? That means that if we rose, up above that, if we were around 269, 270, then we would have to pay about $8 to buy that back, and that would wipe out the $5 gain. So we would have like a $13 million loss. So I'm hoping that doesn't happen. Okay, guys, I'm gonna move into MSTY. And on MSTY, we had a few trades today. We had also, you'll see that we added shares. So typically that's what happens. When you add shares, they're forced to put that money into play. Although they didn't in CONY, I shouldn't say they're forced to. If they want to keep going with earnings, they need to do that with harvesting the yield on the weekly. So they did a buy, call, sell, short, put. On the synthetic, they use the current synthetic price, so they always have the same count here, the same strike price, and the same expiration date, 4/19. Other than that, these are rarely the same. If there's a long period of time to go and they're closer to the money, these are going to be closer to the same. And then we separately, look at this, we pick the lowest because there's only 4 trading days, right? So they only went to 1657. All right, let's bring over this and take a look here, guys. We see on, well, actually, let me go to the synthetics. So on the synthetics, here's where we added these. And going at the 1700 being significantly lower, right? The calls didn't cost us that much money. So we bought calls for 84.5 and we sold, right? I probably need to update my April profits because we sold these, so we netted about another 500,000. So I think when I update this, this will be about break even, right? But other than that, we have some in the call side. So this was a positive. So if we went, so I put in my green here. So we went from having a 10 million, a 10.9 liability to only an 8.6, okay? And the reason is we're substantially lower than these, right? So if we've got to buy back those puts, look at that. Those puts to buy back would cost us 12 million, but we can only sell our calls for 3, right? And so that's what makes it a 9. It makes it 8.6. So we've got a liability that actually shrunk. Whoops, I didn't update this to, let me get my April. We're at 1512. I updated it everywhere else. I think it's 99, but that's not gonna matter a lot as long as I get that 5 there. Okay, so that doesn't change this. This is already built in with the calculation. It just gives us a position there. So expect YieldMax fund managers to also roll out of the 419 synthetics by this Friday at the latest, especially if we rise up close to 1700. The put liability will be greatly diminished. See, if they were to buy these back early, they would get killed on this put value. We're only at 1512, and we don't have the issue here. Okay, let's look at active. So here, we have a lot of room to run before we would be capped or in danger of having to spend cash to get out of there, right? As it stands, we're going to make all this money that we have in these strike prices. But from the synthetic, we would like it to get much closer to 1700. Now, the 1700 would hurt us here, but look, it's on 40 contracts. So I kind of put a box around these. I might even color it in the future. But this box says this is the bulk of our weekly, right? When you've got 10 and 40 from a percentage, it's such a small percentage, right, of the overall. The 10 and the 40 together are 20. Oh, that's out of the money. I should put the percentage that the strikes are, right? So you got 420 versus 50. So you have, you know, probably an 88 to 12. So 88% of the strikes are 12 and 26%. So our strike prices are well out of the money, and the lowest is 9.55. Now, that's not a whole lot of money. What did they capture? Let's take a look at that again. Yeah, they only captured 145,000. So this is what they put on today, and the 40 matches the synthetic, right? The buy the call, sell short the put, right? So not a lot there in terms of the impact on the active. However, we're looking good on those. So MSTY closed at 25.9 and MR at 15.12, right? Also, the implied volatility is still in the 132s. So we still got about $6 to capture. We got a lot of money that we can still capture on these weekly calls. And we went from 430 to 470, right? But let's go back and look at those on the March tab and look at the amount of money that's at stake here. So let's look at our 412s. Here we are. So we've got those, and look at the credit. So we got 689,000 in the 130. We've got 1.2 million in the 290. So that's 1.9, close to 2 million right there. And then we just have diddly squat here in 190,000 in these guys. But the only ones that I think are in jeopardy are the 40s, unless we have a massive rally up, which again would really help our synthetic. So similar but slightly different. I think if we don't get up to 1700 or high 16s, we might not roll. We may wait till Monday or Tuesday and roll then, because I don't see us buying any calls back, right? There's the likelihood of now this one, if we got up to 17, well, I don't even think they would. What did they sell those 1705? What's our break even? Let's go look at those. 1705. Hell, we got 44.1, so our break even's up at 1749. So we could probably do 1710, 1715, and not even sweat on that, right? So we're still going to make the bulk of it. If it went to 1710, we're still going to capture 39 of the 41, right? It's like 90% of the 1.2 million. Okay, so trying to educate you on how those all work. So we talked about the synthetic. We want to fix this, right? We want to fix having this liability. We'd love to see these numbers flip. I'd like to see 260 up here and 76 down there. So let's jump over to holdings. So this is where this is shown. I probably should put, well, I usually put the call up here because I'm hoping we always have a bigger number, right? And then it's easier to do the subtraction. But when you're in the whole 12 million and your gain up here is 3.6, you can see why it's 8.6 or so. Where we're behind the curve, but this position sets pretty well for us. This was positive. It's not a lot of volume, but again, when you compare CONY's 15 million, right, shares, we're only at 2 million. We had dropped at 2025, right, 2,025,000, and when we went back to 2,000,001, so we were up 3.7. We were up a higher percentage in shares than CONY was, but they added 375,000 and we added 75,000 because we have a smaller base, right? Okay, what did that do on our payments? All in all, we added a little bit on short call income. So we're setting at, $1.07 with total 82 cents. Not bad early in the next month. If you figure we have 4 weekly plays within these month-to-month payouts and declaration days. So we've got time, and this could be a really good week in MSTY. It will be a good week for collecting weeklies. And I think they'll ignore, if we're still in the 1500s, I think they'll ignore the synthetic and work on it Monday or Tuesday. Of the final week going into 419 and roll out of that when they can make some money on it. All right, guys, I think that's all. I'm also going to do a video, everything you wanted to know, and yield max for dummies. Just a lot of questions I get. How's taxation? How do these things really work? How do they do in a bear market, right? How do they do in a bull market? What's coming from them? So I've got a whole video that's just going to go into great depth on, I call it yield max funds for dummies. So I think that's really, so look for that in the next day or two. Okay, guys, signing out. Talk to you later. Oh, again, this is not financial advice. I'm not a professional financial advisor. This is for fun and education. Hopefully you had a little bit of fun. I know we got educated. Okay, bye for now, guys.